Okay, so AI. It's everywhere, right? We hear about it in self-driving cars, those chatbots that pop up everywhere. But what about your money? What does it actually mean for your bank account? Let's try to cut through all that noise, all the hype, and really dig into how this technology is quietly changing the way we all handle our finances. And yeah, let's just get right to the heart of it. The big question on everyone's mind. Can this technology really fix your finances? I mean, can it actually help you manage your money better, budget smarter, maybe even invest more wisely? Or is this just another tech trend that's going to overpromise and underdeliver? And, let's be honest, it's a fair question. Because for most of us, money is, well, it's completely overwhelming. We're all juggling budgets, bills, trying to save for the future. It's a lot to handle. So the promise of some smart tool that could swoop in and help, yeah, that sounds pretty appealing. So, to figure out if it can actually help, we first need to get really clear on what we're talking about. When we say finance AI, what does that even mean beyond the buzzwords? Look, when it comes to your money, AI isn't some magic black box. It really just boils down to two simple things. First, pattern recognition, seeing how and where you spend your money. And second, automation, doing things for you based on those patterns. That's it. That's the core idea right there. And this tech usually shows up in one of three main ways you might have already seen. First, you've got those AI-powered budgeting apps on your phone. Then there are robo-advisors, which are basically automated investing platforms. And finally, you have those helpful little financial chatbots that can answer quick questions about your accounts. Okay, so that's the what. Now for the really important part, the how. How do these tools go from being just cool tech to actually solving the real everyday money problems that, keep us up at night? And this is a crucial point. For so many of us, the issue isn't really a fundamental money problem. It's a visibility problem. We just don't have a clear picture of where it's all going. And that is the very first thing these AI tools are designed to fix. This is where those AI budgeting apps absolutely shine. They connect to your accounts and do all that tedious work for you. They automatically sort your spending, they spot patterns like, hey, you spent 20% more on takeout this month. And they send you little alerts to help you stay on track. They just make everything visible. And once you have that visibility, that leads to the next superpower, automation. Because once the AI understands your cash flow, it can start to predict how much you can safely stash away. And then, this is the best part, it just does it for you, automatically transferring that money into savings. Suddenly, willpower is completely out of the equation. Now, what about investing? That's where robo-advisors come in. They take all the guesswork and intimidation out of it. You tell them your goals, your comfort level with risk, and they build a solid, diversified portfolio for you. Then they manage it over time, focusing on smart, long-term principles instead of just chasing the latest hot stock. Which, of course, brings us to that million-dollar question, the one everybody asks when they hear AI and investing in the same sentence. Can a super smart algorithm actually beat the pros? Can it consistently pick winners, dodge the losers, and just outperform the entire market? All right, so here's the honest truth. The hype is that AI is some kind of stock-picking crystal ball, but the reality, for most of us, is that its greatest strength is acting like a behavioral coach. It's the thing that stops you from panic selling in a downturn or buying into hype at the peak. It enforces discipline, and that is where its real power lies. So, with that little reality check in mind, let's take a balanced look at this whole thing. What are the clear benefits we should lean into, and what are the very real risks we need to watch out for? The benefits are pretty clear, and they're compelling. It automates the boring stuff, gives you personalized insights, keeps an eye on your accounts 24/7, and nudges you toward better habits. And maybe best of all, it makes things like investing feel accessible to everyone, not just the super wealthy. But we have to be smart about this. I mean, you're handing over sensitive financial data, so security is a huge deal. There's also a real danger of just blindly trusting the algorithm without using your own judgment. And remember, no AI can eliminate market risk or guarantee you'll make money. It's a tool, not a magic wand. So, if you're curious and you're thinking, okay, maybe I want to try this, how do you do it safely and intelligently? Well, here's a simple, non-intimidating way to get started. Here's a simple 4-step plan. 1. Just start with visibility. For 30 days, let a budgeting app show you where your money is really going. 2. Use what you've learned to automate your savings. 3. If you feel ready, explore a regulated robo-advisor and just start small. And 4. This is maybe the most important part. Review your plan every few months, but please, don't obsess over it daily. So let's bring this all home. No, AI is not going to magically make you rich overnight. That's not what it's for. Its real power is making good financial behavior, the kind that builds real wealth slowly and steadily, just a little bit easier and more automatic. And this is really the key takeaway. In the world of personal finance, we are so often our own worst enemy. We make emotional decisions. The true value of AI is that it can act as a rational guardrail, just helping you avoid those self-sabotaging mistakes. So we'll leave you with this to think about. After seeing what it can and what it can't do, would you trust an algorithm with your money? It's a fascinating question, and there's no right answer. Thanks for exploring it with us.